Hi class, and welcome to this video which covers some content from chapter 2 of our textbook, which is financial transactions and how they impact the balance sheet. In reality though, this video is incredibly important because what we do throughout the rest of accounting essentially is analyze transactions to think about their impact on the business and hence reports and advice. And this is where we start to think to continue our journey doing this in the world of double entry accounting. What do I hope you achieve out of this video? I hope that we can tick off 3 things. I hope that you can, by the end of this, identify the twofold effect of transactions on the accounting equation. You know the impact on the accounting equation, so the business, due to transactions. You can hopefully begin to think about how you might complete a transaction worksheet. And more importantly, you can transfer this information from this worksheet to a balance sheet. So what is this twofold effect of accounting? What is the twofold effect of transactions? You might have heard of it as another term, double entry accounting. When I talk about double entry accounting, this is a system that recognizes and records 2 effects on the accounting equation as a result of a transaction. We need to understand that every transaction will affect at least 2 items in the accounting equation. And this is why we call it double entry accounting. So what is the accounting equation that hopefully we all remember? The accounting equation is your assets must equal your liabilities plus owner's equity, or simply your assets equal, so the things that, let's use some simple terminology, the things that you own is going to equal all the amount that you owe to others, your obligations, plus ultimately how much you are worth. So if I have $100 in my wallet, $100 of assets, but I owe my friend $40, then I'm only worth $60, and this logically means my accounting equation balances. So what we need to know is when we record a transaction, we need to do at least 2 changes to our equation and it must balance. And the easiest way to think about it is this example. If I have $6 of assets, I could have $2 of liabilities and be worth $4. Now, if I change just one of these items, for example, if I change my 6 to a 7, I've done just single entry, and it no longer balances. 7 does not equal 2 plus 4. So I could either change my liabilities to 3, now it balances, or going back to 2, this could be now 5. So the only way I've been able to balance my accounting equation is to do 2 or double entries, which means it balances. So let's look at how this works in real life transactions. For example, number one transaction, the business owner deposited $100,000 of cash to commence the business. You need to be starting to think and have that accounted in your brain going, what's the impact of this transaction to my business, to my accounting equation? And then must result in your accounting equation, your assets equaling your liabilities plus owner's equity must still balance. So the twofold effect is my assets bank is going to increase by $100,000. My bank account goes up by $100,000 because of the entity principle. But my business worth is also going to increase, so my owner's equity goes up by $100,000 as well. So if that was the only part of my business at that stage, my accounting equation would look like this. I have $100 of assets, no liabilities, and my business is worth $100. Bank gone up, asset, owner's equity, so owner's equity also increasing. The second transaction could be the owner took out a bank loan for $50,000. In this case, the twofold effect would be an increase in my bank account, my assets. I have $50,000 more cash in my bank account. But I also have an increase in my loan, which is a liability. So if we keep going on, my accounting equation would suddenly mean I have $150,000 of assets or cash, of which $50,000 or 50 is a liability, and my business is still worth 100. And this is what we need to be thinking. Have I analyzed this transaction with a twofold effect? So done at least changed at least two items in my business to result in my accounting equation balancing. If the owner paid off $2,000 of that loan, that would mean my bank account goes down this time by $2,000 and my loan decreases by $2,000. So I now have $148,000 of cash in the bank because I've paid off two. But this has resulted in my liabilities going down, so my business worth is still worth 100. Each time I've done at least two entries, and in fact two in each time, and it has resulted in my accounting equation balancing. So let's go through three other examples. What happens if I purchase an office desk on credit for $400? What happens if I withdraw $1,500 from the business? And what happens if my biggest credit customer pays $1,000? What's going to be the impact to my accounting equation, so my assets, liabilities, and owner's equity, that results in a balance accounting equation? And you might start to see this table in SACs and exams. If I purchase an office desk on credit, the first thing that's going to happen is my assets will increase. I have a new office desk. That would be what I would call my asset. And this has gone up by $400. How did I pay for this? I paid for this on credit, so I haven't paid the cash yet. This means I have a liability. My liability is going to be accounts payable, which also goes up by $400. Now, if we think this through, has this transaction made my business worth more? No. So there is no effect. And you won't put the dash, you'll write no effect. My assets have gone up by $400 because I have a new desk, which I owe the money still, so my liability has gone up. I have done double entry, that has impacted, resulted in my accounting equation balancing. What's happened? $400 of assets has resulted in my liabilities gone up, no liability, no owner's equity change, my accounting equation balances. In the second one, I withdraw $1,500 from the business to fund the business owner's daughter's 16th birthday party. What's happened here? My bank account goes down. My assets have decreased. What asset has gone down? Bank, and it's gone down by $1,500. There is no loan here, so there is no effect to my liabilities. So it must be a decrease in owner's equity. How is my owner's equity decreased? By $1,500, because I have a drawing. Drawings are something that when they increase, it results in my owner's equity decreasing. Again, I've done two records. It has led to my accounting equation balancing. I have $1,500 less of assets, but this is as a result of no more liabilities, but my business worth is worth $1,500 less. Thirdly, and last one, if my bigger credit customer paid off $1,000, I have a bit of an interesting one. What's the impact here? I'm talking about my customers. So my customers have given me $1,000, sorry. So $1,000 of cash goes up. But what has also happened? I have got $1,000 of accounts receivable being repaid. So that goes down. Both those are assets. So essentially there is no effect to any of them. You won't write a dash, you'll write no effect. But each time I've had my accountant in my brain going, what's the impact of this transaction? Has it balanced? And I've stopped to think about this balancing before I've moved on. How does GST impact that? It makes it a bit more complicated. What is GST? GST is our tax levied by a government, federal government, on purchases of goods and services. And it is 10%. And you will be told whether GST applies in your transaction. You don't have to guess. In accounting, it will tell you whether it occurs or not. What we need to be thinking about is the goods and services tax collected by the government is actually not collected by the government. It's collected by businesses on behalf of the tax office. So businesses are actually tax collectors. And you might not have thought of them like that before. Businesses collect the GST on behalf of the tax office. This means each time GST passes through the business, it must be recorded and tracked. When we collect GST, it increases what is owed to the Australian Tax Office. When the GST is paid by a business, it decreases what they owe to the government. And this means that we have to keep track, and ultimately we need to work out how much that we owe to the government. What we owe to the government, GST owed, equals GST collected minus GST paid. And we report this in our balance sheet as an account called, we record it in an account called GST clearing, and it can either be a liability or an asset. If we owe money, so our GST is more than our GST collected, GST is owed, so it is a liability. If GST collected is greater than paid. GST is an asset, so we have a GST refund, which is an asset because we are going to get some money if our GST collected is less than the GST that we've paid. Because if we've paid more than we've collected, of course we don't need to give any more to the government. So we're going to have to keep a track. If it's a liability, we're going to call it GST liability. And if it is an asset, so the government owes us money, we're going to call it a GST refund. If we have a GST liability, at some stage we're going to have to pay that back. This is what we call a GST settlement. And this results in our bank going down and our GST liability also going down. Quite complicated. You'll get lots of practice throughout the year. But what we need to think about is how is this going to impact our accounting equation? My tips for you is to make sure that in your assumption, in your thinking, always think of it as a liability. Is this transaction going to be impacting how much I owe to the government? How do I calculate it? It is 10%. When a question says plus GST, that means you're going to times the amount by 10%. And I'll give you an example. If I have a question that says you $1,000 plus GST, that means my GST equals $1,000 times 10%, which equals $100. Sometimes you'll be given the transaction where it says GST including it says including GST. For example, $1,100 including GST. I work out the GST by not timesing it by 10%, but dividing it by 11. $1,100 divided by 11 equals 100. You can see that this is the same transaction, but I've got to the GST amount of $100 by two different methods, depending if it says plus GST or including GST. So what are the two other categories affected by transactions that we haven't talked about? we have talked about our accounting equation as assets equals liabilities plus owner's equity. What are the two other ones? Revenues and expenses. I want you to think of the accounting equation as also being impacted by revenues or expenses. Because what do revenue and expenses equal? If we have revenue minus expenses, we get to profit. And profit increases owner's equity. Profit increases the business worth. And loss decreases the owner's equity because your business is worth less if you have a loss. So we can start to think of our accounting equation as not just assets equals liabilities plus owner's equity, as assets equal starting owner's equity plus revenue minus expenses. And this will get to your accounting equation as well. So your assets equals your liabilities plus starting owner's equity plus or minus your profit or loss. So this is how this impacts your owner's equity. Profit increases your business worth, which is essentially what owner's equity is. So let's think about how the twofold effect is going to be impacted by revenues, expenses, and GST to bring it all together. We know that our accounting equation, assets equals liabilities plus owner's equity, still has to balance. And here is an example. If I made a sale of goods for $2,000 plus GST of $200, and the cost of these goods that I sold cost $1,000, I actually have 5 things impacted. The first thing that is going to be impacted is my bank account. My asset bank goes up by $2,200 because I've collected the $2,000 for the sale plus the $200 of the good GST. What has gone down in terms of my assets is the inventory. I sold goods. What I sold was inventory which has left my business, and those goods of inventory I recorded at my cost price of $1,000. I have an increase in my GST clearing liability. My liability has gone up because I have received $200 of GST that I must give to the government. I have also got some revenues and expenses. I have sales of $2,000 and costs of sales of $1,000. Because if we think about it, this transaction has made me some profit. And it might make sense that our revenues were $2,000, but I didn't make $2,000 of profit because there was an expense, how much it cost. And that cost was $1,000. It might make sense to you that you made $1,000 of profit. I sold something for $2,000 that cost me $1,000. Finally, what happens if I buy a vehicle? My asset is going to go up. My bank account is going to go down. Now, it might seem a bit weird. Why are these numbers different? My vehicle that I have got is worth $10,000, but I had to pay $1,000 of GST, which means my liability has decreased. So my assets have gone up by 10,000. They've gone down by 1,000 total assets, but my liabilities have gone down 1,000 as well. Might feel a bit weird. I've bought a vehicle, sure, my assets go up, but remember, you've paid with the cash, you had to pay the GST. This is offset how much you owe to the government, and hopefully that vehicle will give you lots of sales, build your business, and that's how we need to be thinking about it. How do we work this through? In this chapter, you might be asked to use a transaction worksheet, which gets you to think about the twofold effect. But ultimately, the best way to do it is with a scrap bit of paper and to start to work through how I've done it there. your working should have A's and increases and numbers, and if at the minimum on your paper, and you should be doing this thinking process in your head. Now we need to understand each time this happens, my balance sheet is impacted. Each time my transactions impact my accounting equation, my assets, my liabilities or owner's equity, in reality, I am changing my balance sheet. Now, in reality, you don't change a balance sheet every time a transaction is. You'll just make that report when you are needed, often at the end of the month, but this will have to show all the changes to your accounting equation throughout that time period to make sure that your assets equal your liabilities and owner's equity. So if you have recorded things accurately when you make your final balance sheet and your assets equals your liabilities and owner's equity. And I hope you found this video useful. It is an incredibly important skill determining the twofold effect of transactions on the accounting equation. And this is something that we will do throughout the year. Well done for watching this video.